Welcome back, friends. Fifth module, marginal costing. Marginal costing is a technique of costing which is highly useful for management in decision making. It is an important tool in the hands of the management to control costs and take vital decisions to improve the profitability of the business. Many important decisions are based on the behavior of costs in relation to the volume of output. Marginal costing is a technique in which costs are classified according to their variability into two variable costs and fixed costs. While variable costs vary along with changes in output, fixed cost remains constant at all levels of output. As fixed costs remain constant, increase in output will lead to a decrease in cost of production per unit. This behavior of cost helps the management in taking the right business decisions. That is the concept of marginal cost. So, why the concept of marginal cost is used in the business? That is an important aspect, and that will be the concept we are going to discuss and learn in this module regarding marginal cost. We know the ultimate objective of every business is to maximize profit. So, in order to maximize profit, every concern has two options. Either they can increase the price of the product or reduce the cost of the product. Increasing the price of the product is a suicide. So we leave that option. The remaining option is the decrease in the cost of the product. Reducing the cost of the product theoretically may be simple, but in the practical life it is a very important and tedious task. So in order to reduce the cost, one who is trying to reduce the cost must have a proper idea regarding what is meant by cost, concept of cost, and the techniques of cost. And these all items are learned in cost accounting. And for decision making, management need information regarding cost. So since the cost and costing area is a wide aspect, decision makers or the management concentrate mainly on marginal cost concept for decision making. And why they are giving importance to marginal cost? Sometimes the term marginal cost can be used instead of the term variable cost. You might have heard the term variable cost and fixed cost, because the total cost earned or occurred during the period or during the business can be segregated into two parts: fixed cost and variable cost. Variable cost and marginal cost, these two terms are used synonymously. And why business is considering marginal cost as a part of decision making? Because fixed costs are those costs that occur even if there is operations in the business. For example, if I am running a company, if I am running or not, there are some items of fixed cost that has to be dealt by me. Rent of the building, even if I am running the business or not, I have to pay the rent. Electricity bill of the building, it depends upon the usage, but if for a concern there is a minimum slab that has to be paid. Salary of the workers, even if there is profit earned in the business or not, if I am running at the loss also, I have to pay the salaries of the workers. So these are the costs that remain fixed even if there is operations occur or not. So decision regarding the fixed cost will not bring some effect to the decisions. So the next important cost that has to be considered is variable cost, because variable costs are those costs that are directly related to production. Whenever there is an increase in production, variable cost increases. So whenever there is a decrease in production, variable cost decreases. So variable cost has a considerable role in the cost of production. Since it has a considerable role, management give emphasis on variable cost. The other term of variable cost is marginal cost. So the method or technique for identifying, controlling marginal cost is known as marginal costing. So marginal costing is a technique of costing in which Costs are classified into fixed cost and variable cost, and only variable costs are charged to the operations or processes, as I have mentioned earlier. Under this technique, cost of production includes only variable costs because fixed costs are charged against profit of the period in which they arise, and fixed cost remains constant. So let us leave fixed cost. Difference between sales and variable cost is known as contribution. Contribution is an important aspect in the marginal costing concept. We will be discussing about contribution in the coming areas. So these are the concept of marginal cost and marginal costing. Next, marginal cost equal to variable cost of production because marginal cost and variable cost are used synonymously. And variable cost is a term that is given to a certain number of items. It is a common term given to the certain items. So some of the items that comes under variable cost are direct material, direct labor, direct expenses and variable overheads. These items are the parts that comes under the variable cost of production. Remember these items. These items may be given individually and given scattered in the questions. So you need to identify these items in order to find out the variable cost, because variable cost is an important aspect in the equations regarding marginal cost. Next one, assumptions regarding marginal costing or variable costing, because these assumptions are common aspect that has to be considered while dealing with various mathematical operations relating to the marginal cost. So various assumptions of marginal costing are: all costs are classified into fixed and variable costs. Fixed cost remains constant at all levels, as I have mentioned earlier. Variable cost per unit remains constant and total variable cost change indirectly related to production. As I have mentioned earlier, variable cost changes directly with production. Variable cost total amount, but variable cost per unit remains constant. That is the concept of variable cost, and that is one of the properties of variable cost. Variable cost per unit remains constant. That is why we said earlier that variable cost change with production, because variable cost increases when production increases, because variable cost unit per unit is constant. When number of units increases, variable cost relating to the units also increases. That is the concept of variable cost. Selling price per unit remains the same, and cost and profit are influenced by the volume of output. These are the basic assumptions of marginal cost. Next one, concept of contribution. As I have mentioned the term earlier, contribution is an important aspect in the marginal cost decisions, because management will be setting aside fixed cost while taking decision and consider only variable cost. And from sales, the management or the concern, whoever is studying the concept, will deduct variable cost, and the difference from sales and variable cost is known as contribution. Contribution is an important aspect in taking decisions regarding marginal cost, because contribution is a decision factor relating to the marginal cost concept. More the contribution means the organization can increase or ability to earn more profit. Reduction in the contribution value means the organization's inability to earn more profits. That is the importance of contribution. And the contribution is an important concept, as I mentioned earlier, is the technique of marginal costing. Contribution is the difference between sales value and the variable cost. In other words, it is the excess of sales over variable cost. It is the amount available for covering the fixed cost and profit. Contribution is also known as gross margin or contribution margin. Contribution is the basis of decision making under marginal costing. It is an indicator of the profitability of the concern. Higher the contribution, higher the profit, and vice versa. So contribution is directly related to the amount of sales, and increase in sales is followed by an increase in contribution, just like the variable cost and total production. Next one, absorption costing. It is an important concept in costing, and it has to be considered while studying marginal costing, because absorption costing is a technique of charging all costs irrespective of its nature, such as variable cost, fixed cost, semi-variable cost, and all types of costs while computing the total cost of production. It is a traditional way of ascertaining the cost. No distinction is made between variable cost, fixed cost, and semi-variable cost, and all costs are charged to the cost of production. Since it consider all items of cost, it is known as full costing. It is an important area because questions regarding difference between or the versus between absorption costing and marginal costing will be asked in the question examinations. So just go through the details regarding the absorption costing in the text and try to identify the difference between absorption costing and marginal costing. The main difference is that marginal costing is a concept where, say, variable cost is segregated from the total cost, but it doesn't mean that fixed cost is neglected. Fixed cost is considered, but for decision making, contribution is given more importance rather than profit, because contribution is having a vital role in the decision making process. That is the concept of marginal cost. But in the absorption costing, all costs are considered while taking decisions. That is the concept of absorption costing. Next one, differential costing. Differential costing refers to the difference in the total cost between two levels of activity or two courses of activity. It is a change in the total cost due to a change in alternate course of action. Differential cost may be incremental cost or decremental cost. If the change results in increase in total cost, it is called incremental cost. The concept is that if I am a businessman, I own a company, I can either follow capital intensive method of production or labor intensive method of production. So if I take a decision to follow a capital intensive method of production, then my cost of production related to the capital intensive method will be different when compared to a labor intensive method. So a decision that leads to change in the total cost of production is known as differential cost, and that decision leads to an increase in the cost of production is known as incremental cost. If the decision leads to decrease in cost is known as decremental cost. Since we are learning only marginal costing or costing part, we only just understand the concept of incremental cost, and there are another part, that is incremental revenue. That is the same concept. If the decision leads to increase in revenue, it is known as incremental revenue. If the decision leads to decrease in revenue, it is known as decremental revenue. For the time being, you need to understand only incremental cost as well as decremental cost and also differential costing. So try to identify, understand the concept of absorption costing and differential costing, and try to identify the differences between marginal costing and absorption costing, and marginal costing and differential costing. It's a very important area. It has been asked numerous times in the examinations. So identify those areas. Since we are out of time, we have to go to the major areas regarding the marginal costing. So just go through the theoretical aspects. If you have any issues, please let me know. Next one, contribution or gross margin or contribution margin. We have gone through those area and we have explained the concept of contribution as well as profit. I hope you understand the concept of contribution and profit. It is an important concept or technique of marginal costing. It is the amount available for covering fixed costs and profits. Remember, these are the important equations. From now on, we will be dealing with various equation cases. Marginal cost consists of number of equations. All the equations are easy, but you have to analyze and familiarize each equations, because the nature of the question and the requirement of the equations is different. So first equation, sales minus variable cost or marginal cost, you will get contribution. We have mentioned earlier. But if you deduct total cost from sales, you will get profit. So the difference between contribution and profit is, contribution is the result after considering variable cost. Profit is the result after considering total cost. So why the contribution is given importance is, the cost of production is widely affected by variable cost, because fixed cost will not have any much effect on change in the total cost of production. the change in the total cost of production widely depend upon variable cost or marginal cost. So that is why marginal cost or variable cost is given so much importance, and the result which we obtain from adjusting variable cost from sales is known as contribution. That is why contribution is given more importance when it compares to profits. Next one, marginal cost equation. Marginal cost equation is contribution equal to fixed cost plus profit. Contribution is the difference between sales minus variable cost, but if you add fixed cost with profit, you will get contribution. This is an equation, remember it. And this equation is not only used for contribution, sometimes you have to use the same equation to find profit, and in that case contribution and fixed cost will be given, and sometimes contribution will not be given. You will have to find fixed cost and profits. For that you need to first identify contribution, and you know the equation for finding the contribution. Here is the equation for finding the contribution. So let us try one example. From the following information, ascertain the amount of profit. As I have mentioned earlier, profit here, the equation for finding the profit is this one. In the question it is given sales, variable cost and fixed cost. So if you are using this equation, you have fixed cost but you need contribution. So in order to find contribution, sales minus variable cost, this equation has to be used. So this is the simple peculiar type of computations in the marginal costing concept. We will be using the same principles and pattern during the various cases under marginal costing. See, contribution equal to sales minus variable cost, and you got 50,000. Next one, another case. From the following data, calculate fixed cost, sales, variable cost and profit is given. Just go through the equation which we have dealt in the last slide. Try to find the answer. Next one, from the following data, ascertain the amount of variable cost. Details is given. Just substitute the information, the equations which we have discussed previously. You will get the answer. Next one, marginal cost statement. Until now we have been discussing about the concept of marginal cost, variable cost, sales, profits, likewise. But if we show all these items in a statement form, it is known as marginal cost statement. So it is a statement prepared to ascertain the profit under marginal costing. Not only profit, we are preparing marginal cost statement so as to identify contribution. The statement starts with sales, from which variable costs are deducted. Sometimes variable cost may be given as a single amount, but sometimes it may be given as individual items such as direct material, direct labor, direct expenses, direct variable factory overheads, variable administrative overheads. Sometimes these three items, variable selling and distribution overhead, these three items can be said as variable overheads. Sometimes they may be given as individual items. Sometimes they may give all these items as a single amount as variable cost. So from sales, if you deduct all these items, you will get contribution during the period. It is the most vital part in the decision making process. And from contribution, if you deduct fixed items such as fixed overheads and fixed costs, you will get profit during the period. Profit is an important aspect for a business point of view, but for the decision making, contribution is also important, and it is more important than profit when it comes to marginal costing concept. That is the concepts regarding marginal cost and marginal costing technique. Next one, let us try out an example case regarding preparation of marginal cost statement. I hope you understand the marginal cost statement. You are asked to find total marginal cost, contribution as well as profit. During the period, details is given. Output 20,000 units is given. Selling price per unit is 12. Direct materials per unit is 5. Direct labor per unit is 2. Variable overheads per unit is 1. And fixed cost during the period is 60,000. So if you go through the question, remember and familiarize the pattern. This is the typical style of a marginal cost question. Output will be given in the units, and selling price, direct material, all these items will be given in per unit. The reason is, in the marginal cost decision, not only the total amount is also helpful in decision making, per unit value also is an important factor in decision making. So, in the question they might give per unit as well as total. So, while preparing the statement, you have to segregate per unit items as well as total amount items. So, let us deal with how to prepare this marginal cost statement, and remember, in almost all the questions, fixed cost will be given as a total amount. Never expect fixed cost per unit. So, this is a style of a marginal cost statement. I hope you have learned this statement in the previous semesters. So, just go through it. Output 20,000 units, particulars per unit, total amount. 20,000 units is the total output during the period. Sales is 12. So, 12 into 20,000 you will get 2,40,000, and from sales you will be deducting various variable cost items, direct material, direct labor, direct expenses. 5 to 1, 5 into 2 20, 1 lakh, 2 into 20, 40,000, 120, 20,000. If you add these three items, you will get the total variable cost per unit 8, and 8 into 20,000 you will get 1,60,000. And apart from that, if you deduct these variable cost item from 2,40,000, you will also get 1,60,000. This is a cross verification step. 1,60,000, and from 1,60,000, if we deduct 1,60,000 from 2,40,000, you will get 80,000. And if you multiply this 4 per unit from 12, if you deduct 8, you will get contribution per unit. If you multiply 4 with 20,000, you will get the same amount, 80,000. And finally, if you deduct fixed cost 60,000, you will get profit. So, this is just a pattern of a marginal cost statement. This is how you have to prepare, and remember to prepare per unit statement as well as total cost. And remember, you need to prepare only till contribution per unit, because decision regarding per unit is taken only till contribution, and contribution per unit is the factor for decision making process. So, you need to prepare only till here in case of per unit column, and regarding total you have to find it till profit. So, this is how a marginal cost statement has to be prepared. Next one, profit volume ratio. This is another important factor that has to be learned in the marginal costing. And one more thing, previously we have worked out individual cases regarding each computation part. There are numerous cases in the text, and try to work out all the cases and familiarize it. So, come back to the area. Profit volume ratio, otherwise known as PV ratio. As we have discussed and mentioned earlier regarding various aspects, contribution is the difference between sales and variable cost. So, contribution varies in direct proportion with the sales. When the sales increases, contribution also increases. The relationship between contributions and sales is expressed as a percentage in the form of PV ratio, otherwise known as profit volume ratio. It is also called contributions to sales ratio. That is the concept of profit volume ratio or PV ratio. It is just the percentage representation of contribution sales relationship. And PV ratio is a very important factor in the decision making process, because it is a percentage representation. It is actually a percentage representation, and it is very important in decision making process. PV ratio is the ratio of contribution to sales. It is expressed as percentage. Remember, it is always expressed as percentage, and it is a ratio indicates the relative profitability of different products. Higher PV ratio means higher the contribution and thereby higher profit. So, the equation for finding out the profit volume ratio is contribution by sales into 100, and remember the equation PV equal to contribution by sales into 100. This same equation can be used interchangeably depending upon the details given in the question. The same equation can be used like the sales equal to contribution by PV. So the equation, as I have mentioned earlier, equations are used interchangeably, and there are some of the equations that are related to PV ratio. There are number of equations for finding PV ratio. Next one, PV ratio is change in profit divided by change in sales into 100. This equation is used whenever you are given details relating to two accounting periods. In such situations, we will be using the PV ratio, this one, change in profit by change in sales into 100. Next one, PV ratio equal to fixed cost by break-even sales in 100. We will be studying break-even sales in detail in the next coming sessions. I hope you know what is meant by break-even sales. Sales at break-even point is known as break-even sales. So familiarize all these equations. We will be using these equations depending upon the pattern of the question. Next one, the PV ratio equal to change in contribution divided by change in sales into 100. As I have mentioned earlier, higher percentage means higher profitability and higher contribution and higher performance for the organization, and vice versa for the if you are getting a lower PV ratio. So that is the concept of PV ratio. So let us try some of the cases. Calculate PV ratio. It's a very easy concept. Sales 2,50,000 is given. DM means direct material. For the time being, I am using abbreviations. Never use abbreviations in the examinations. The direct material 70,000, direct wages 50,000, variable overheads is 30,000, and fixed overheads is 50,000. Fixed overheads or fixed costs, they can be used interchangeably. So how we are going to find the PV ratio? There are some of the equations for finding the PV ratio. Since there is not much complication, the details given, you can go with the first equation, contribution by sales. So if you go through the question, there is no information regarding contribution, but you can easily find the amount of contribution. Contribution is sales minus variable cost. Variable cost is given as number of different items. So sales is already given 2,50,000 minus variable cost. If you add together all those variable items, you will get 1,50,000. So contribution during the period is 1 lakh. Also PV ratio equal to contribution by sales into 100. So by substituting the certain values in the equation, you got the PV ratio 40%. So this is how you have to find PV ratio. Computation is in all the cases, as well as in the adjustment cases, it is very simple when compared to the various methods which we have and previously. Just go through the theoretical aspects as well as the various equations which we have learned. Next one, calculate PV ratio when sales is 5 lakhs, fixed cost is 1 lakh, profit is 50,000. Try to find the answer. So that's all for now. We will discuss about the further cases in the next slides.